Hey guys, I want to do a quick video on a trade that will demonstrate the power of options. It was a trade I actually performed very poorly on. I got emotional on the exit. It was actually before Labor Day weekend that the price bar was getting a little bit ugly. I had a very quick 100% gain, 100% plus gain on the stock, and I didn't want to hold it over that weekend. The darn stock was up practically 200% out of the base at that point. Generally, 80–90% of the time you're going to get several weeks, if not a few months, consolidation after that big of a gain and needing to digest the gains. But this was one of those stocks that just fooled me and fooled a lot of people. In fact, I left probably about $100,000 on the table. I had people in the trading club that I use, the chat channel, that had literally one guy had, I believe, 10,000 shares that he had sold the same deal. He just exited too quickly, and he left about $1.2 million on the table. So you can see this is just, it just happens with trading. You get in a swing trading mode and then you forget to look at the big picture. So I had a little realization about the best way to fix this, just based on the fact that a lot of times, regardless of what a stock is going to do, it generally will print specific patterns on a breakout. You know, generally a 7 to 10 or a 10 to 13 day cycle before it, even if it's going to just crater after that. More than likely, if you have a decent stock with good reason for it breaking out to new high in the first place, it's going to generally print a 5 to 7 or 10 to 13 day cycle. I'll show you what my solution was in the future when this type of trade comes along, but it was really sickening basically to have a stock that I had very little. I mean, I actually had $1,600 in a trade, 4 contracts, controlling 400 shares, and the stock went from my buy point a little bit over, I think it was under, I think it was a $45 call if I remember right. Bought it around 42 bucks, and the stock went to $300 in just 3–4 weeks. It was just crazy, and the options on it just went out of this world. And I'll show you the chart, and again, I'm still looking my wounds on that particular trade, and I'm sure it won't be the last time I do something like that, but that's just part of trading. You get into a swing trading mode and you see you got a nice profit. It's going to do something that normally happens. It's normally going to pull back in the consolidation zone after the big of a gain, but it didn't. And lessons learned. Let me go ahead and show you, break down the chart here. Okay, here's the breakdown inside of the base. This one again, strong momentum, very quick 50% gain, 0.5 BMI. Vector was 1. We had 3 cat lines set up. We had the TD2 cycle, first line, popped out of that, set cat 2, pull back inside of that again. This is a really strong price support here at the $25 mark. Very strong, psychologically powerful price point. And you can see it popped off of that very quickly, took out the base highs, and was off to the race. Let's go ahead and scroll ahead a little bit here. So cat 3 set up outside of the original IPO high, right around here, and you can see popped up very nicely. I think I got knocked out of the trade one of these days here. Intraday, the bar just started getting ugly after I was up 100% before Labor Day weekends. So basically I had 1 week hold and about 117% gain, $3,200 in, $3,800 out. So again, I left a huge amount of money on the table. And let's go ahead and look at the rest of this. Got knocked out, but you can see what happened over just a few weeks' time. So one of the fixes I came up with was, because again, we're operating out of probabilities, 80 to 90% plus of the time. When a stock breaks out of the a solid base, you're going to get at least a 5 to 7 or 10 to 13 day cycle out of that. So best thing to do is do nothing. Sit on your hands until you get the cycle set. So the first cycle it set was a TD4. from the breakout of the pullback out of the small cup. And so TD4 set, and then you go internal on that. If the prices go inside of that trend line, if you extrapolate that trend line out here, prices go inside of that, you look for your next cycle to set. So if it sets outside of that, you would look at your day count, your bar count on that, and then set your trend line. But this one stayed inside, slight angle inside. This is a TD3 cycle. So generally, when you get a strong move on a cycle, you can extrapolate. Generally, 3 times out would be usually it puts a cap on the trend. Again, it's a measuring move inside the base, and then if you extrapolate the trend lines outside of that breakout point, you get generally 3. Sometimes an extreme parabolic move, you get a 5 extension of the channel. This one actually hit 2+ extensions of the channel. And again, psychological price point right up here at $300 mark. It hit it very quickly. This is all intraday. It went from $150 to $300 one day, and then just cratered off of that. So it probably would have been pretty difficult to get out of my optimal option pricing. By the time I actually noticed this, again, I was already out of the trade, but by the time I noticed what this had done intraday, it was already back down 225 or so. So no telling whether anybody got out near the high in the options. I'll probably shave $30 to $50 off of the option pricing just because it was way out there. I had December call options on that, and so no one was going to give me December pricing on a parabolic move like that, I'm quite sure. But anyways, it was a very, very nice overall gain potential on the options, and actually on the stock you probably would have been able to lock it in better day trading that final day. You would have much better chance of getting a full price of that if you had traded it correctly intraday. Whereas the option pricing would have had a lot of play in it probably. But either way, a lot of money on that. When you get $260 in the money in 1 month, I mean, that's just unbelievable. And again, it's hard to get out of a swing trading mode when you got a lot of stocks you're watching at times, and that's one of the things I just learned from this. This particular stock, TLRY, TLRY, was a cannabis stock. That's a big enough story, but the final day when this really catapulted, I believe there was a story about them teaming up with some beverage manufacturer for a cannabis soda, which I guess would be the equivalent of a alcohol beverage without as much of a hangover, maybe. I don't know. But either way, it was a big story, and but again, it's one of those sell the news. And that's what happened very quickly. It went from $300 down to $100 in just a few days' time. So this is what can happen when you focus on stocks coming out of a new high, off of an IPO very quickly, cycle-based. You got your cat line setting up. And so these are the ones to look out for. And if you learn anything from this one, learn to be more nimble than I was on this particular trade. And, one of these trades can make your year. And next time I see one, I'll trade it differently, I'm sure. I don't know if I'll lock in the highs of something like that. But this type of trade doesn't come along every year even. Every couple years you might see something like this. But this is a very uncommon setup. But this is what you can find in being in the market and looking for stocks on a daily basis, going through a lot of charts. That's what we do at the club. And so next one that comes along, we'll be posting it. Hope you enjoyed the video.